Hey everyone, the Motivational Professor here, and welcome back to another video on crude oil. Now, I first want to start by saying congratulations to our trading team members who took advantage of this strong support that we gave them inside of our group chat. We talked about that 78.35 to 45 area would be a nice opportunity for a possible bounce back up. So congratulations to those folks in the Diamond members area who messaged me and said, hey, thank you, Armando. I had another great winning day today. So we are going to be breaking down crude oil starting at the daily. I'm going to walk all the way back down to the 5-minute chart. And as a bonus, if you stay until the end, I'm going to give you a quick trading strategy that uses Bollinger bands and also our support and resistance to get you some scalping opportunities throughout the day. So are you ready? Let's jump into today's analysis. Okay, so let's start on the daily time frame. And you can, we usually see patterns be moving cycles, right? We have one cycle. We just completed a second cycle. So the question is, are we going to continue the third leg down in that cycle with crude oil? A couple of things that are very important to note here. Number one is the fact that we have these equal lows sitting right here that have not yet been taken out. So we're going to look at that, as well as we kind of move forward. Secondly is, as we kind of look at this area right here, and we throw a Fibonacci retracement from this wick to this lower wick, which is going to be right here. Okay, we see here that price on the daily rejected late on Friday, that's 61.8. Okay, so again, if we look at it from a 5-minute standpoint, right, this is what it looks like. Okay, we rejected the 61.8 here in these areas, and so we closed dropping on the last 5-minute candle. Okay, so again, that's how we do time frame analysis. We're kind of looking to see what is kind of happening as we move forward. And I'm always going to, encourage you that no matter what you trade, that you look at the time frame analysis. I like to start at the daily. There are times that I will begin to look at the monthly and then the weekly, but because we're ending the end of August, I'm going to start and the daily, and then I'm going to work my way down on this video here for you. So as we kind of go back into the chart, a couple things that stick to mind is we have to keep in mind that we have rejected the 61.8. Now, that doesn't mean that we are going to come down. Another thing that we should look at, and let me grab I'll kind of grab this arrow right here, right? So right here, right, we look at this here, we made a low there, and then here we closed and we made a lower low. So from the daily chart, we are a lower low, a lower high, a lower low, a lower high. If you cannot see that, here it is again, right? A low, a lower high, a lower low, and a lower high. So again, we begin to see kind of the chart pattern as it's kind of evolving, as some of you who are newer can begin to look at price action. We can kind of look at the same thing here. Let me grab a brush, right? We can kind of see the movements, happening with this as well, right? From the opposite direction. And, again, some smaller candles there on the daily time frame. So, I like to start off with just looking at the big picture and saying, okay, as we begin to develop a game plan, right, depending on your style of trading, what are we looking at, right? What are we looking at? So we can see here, right, based on the price action, and only if we were looking at price action. Is price action always 100% correct? The answer is no. But based on today's analysis on crude oil, the price action right now is consistent with price continuing to drop if we make a lower low. If we do not make a lower low, then obviously we're going to look for price to go to the upside. Okay, so as we kind of begin to walk down the process, I am going to keep the Fibonacci levels there so we can kind of begin to see, because there's a couple of areas that I am going to be noting. So the first thing we want to keep in mind is that with the fib levels, remember that fib levels work as areas of support and resistance, especially on the bigger time frame. Okay, so if you notice right here on the 4-hour time frame, let me grab an arrow, right? Look where we closed. We closed there, right? We did not close above here. So we did not make a new high on the 4-hour time frame. We closed below. We have 1 wick, 2 wicks, 3 wicks. So everything is indicating that we're going to see price possibly come back down. Of course, we're not given any surprises with these Sunday market gaps, okay? But based on the price action, right, we did not make a new high. If we back this up a little bit, right, and let me just back this up a little bit here, we can kind of see, and again, just kind of just a broad scope and a broad brush, right? We can kind of see this right here, right? So we can't ignore the fact that we did not close above this trend line that's already touched on 3 different occasions. That's a pretty strong trend line, right? We will need to close above what I believe to be 80, about 80.40, right? For us to continue going back up to at least the next fib level of 8100 and then 8150. I like the every 50s when it comes to crude oil. So again, just another indication that if you take the time to slow down and just do some form of an analysis, you'll begin to kind of what I call deposit the nuggets on whether you're going to be bullish or bearish, right? Begin to see the price action. This is something that we are talking about exclusively inside of our Diamond YouTube members area. So again, I'm going to encourage you, if you see the scrolling, kind of down below, again, for $4.99 a month, not a week. That isn't $400.99. No, it's $4.99, right? If you cut out a cup of coffee a month, I am going to guarantee that you make that money back and then some to join the members area and join the others that are in there, share ideas. And it doesn't have to just be about crude oil. Anything that you trade, you let me know in the members area, and we are going to be doing an analysis on it. So I encourage you to take advantage of that as well. So now as we kind of look at the 4-hour and we begin to kind of take a look at this confirmation, what we want to do is we want to go ahead and look to a smaller time frame, right? We want to look at the smaller time frame. So now we're looking at the 1-hour time frame, right? The scenario hasn't changed. Now you can see that trend line a little bit better, right? So we see here our lower lows, right, that we have not taken out yet. And I'm going to mark this as equal lows because I think those are important. I think we are going to take out these equal lows, right? We tried here, but we did not. So we still got to take out those possible equal lows that are sitting right there. Now, what's interesting as we kind of zoom in here, we can see that this fib level, okay, works. Again, this is the 50%, right? Works as both areas of support and resistance. We can see it all throughout the fib level. And we have come down and we closed the last hour in a doji with kind of hitting off this 50 percentile. But again, unless we close above this trend line and above right here, this 80-40 area, again, we are still, based on price action, we are looking for price to come back down, right? Based on what we're seeing right now as form of this evaluation. Okay. So that, again, we're seeing that confirmation on the 1-hour. And then when we drop down to the 15, now we can begin to see it better. Okay. We can begin to see it a little bit better. And then again, you can also see how the 50% on the fib levels is also a good area of support and resistance. Okay. So what I want to do is I want to kind of get out of this area right in here. And the first thing I want to kind of do, because again, I don't want you to get trained that support and resistance on a small time frame, since we're going to be scalping this, is, let me grab a square, is a line, right? Somebody asked me that question this week, right? It's an area. And they said, well, how can you kind of use an area? I go, because a zone is not a actual line, it's an area. So when we mark up these areas, you've got to give yourself, 5, 10 cents points, whatever you want to call them, in both directions. And you want to look for those entries near those areas based on whatever you are, looking to do, right? So let me move this up here. Okay. And again, we'll do one more here to the top side that we can clearly see here. I'm not going to go so far out so what I want you to do now, and I'm going to kind of do one more to the bottom. So this is what I call a zone within a smaller time frame, right? So right here, we can see support and resistance, right, that we can kind of look at. And then we also see it here and right here, which is where we wicked, right? So again, we want to make this bigger. And again, we want to give you areas to scalp the market. So we're going to mark here, and then we're going to mark one more to the bottom side. So as we are marking these now, and I think we're going to be staying within these parameters for right now, what I want you to do as we are marking these up is I want you to pause this video, and I want you to go to your trading view chart now, and I want you to mark up the exact same zones that I mark up. So when you see my chart later in the week, and I keep these zones there, you can refer to them as well. So if you need to pause the video, please do so and mark up your zones. Okay, so we've got those equal lows that have been established right there that we have yet to break. Now we understand that we have a trend line, and now we can begin to kind of look, at our analysis as we move forward. So obviously, the first thing we have to keep in mind is, where we are at, right? We are at an area on the 15-minute chart, an area of support, which is right here. Okay, so if we are going to gap down, okay, I don't know what the gap is going to happen, but let's say that we gap down below this zone, okay, and I'm going to make this red for the gap, then you could assume that price is probably going to come back down to our next support area, and then we are going to go back up to close the gap. Okay, that's the gap scenario, and knowing the fact that this is going to be our gap, meaning that's where price closed on Friday, and price usually will come back to close that gap. Okay, so that is awesome right there. And again, if you've never traded the gap, then just be very careful, especially if we have a big gap on a Sunday night. I will post to our members if I'm going to trade the gap or not, to under leverage the gap, because gaps don't always close necessarily within a few seconds or a few minutes. For me, for crude oil, there has to be about a 20-point gap or larger for me to take it. If it's 6 or 7 cent difference, I don't trade the gap. It's not worth it. But if it's 20, 30 points in either direction, I will usually enter a position, and I will let my members know when I'm getting in for the gap. So again, just another advantage of being inside of our private members group area. So again, if we gap down, that's a scenario. Now, vice versa, if we gap to the top side up here somewhere, right? Let's say we do gap up here. We'll make this green for a bullish candle. Now we're looking at price to do the opposite, right? We may bounce off this trend line, which is near the zone, right? And then we are going to come back down to kind of take out that gap. So this is kind of the zones and the play that we're looking at, okay? Now, what I would encourage you to do, and I'm going to be talking about this in just a minute, is in these areas here, for example, I like to go ahead and create, and I'm going to do this for you as a bonus on this video. So I wasn't going to do this, but I'm going to go ahead and take 5 minutes and mark this up, and then I want you to pay attention to what I'm doing here, okay? Watch this and pay attention. So when we get back to the chart, I'm going to give you some entries here that you can take advantage of. Now, what I mean by that is we are going to do right here. They're not going to be big moves, okay? So because price is up there, I'm going to set up a sell stop here, okay? So I'm going to I have to bring these down a little bit, or I'm going to have way too much writing. So I'm going to do a sell stop, and let me get back into it. And I'm going to call this 79.62. 79.62. So you can begin to enter these on your mobile device or wherever you trade, okay? And then profit is going to be 35. Let's go for 20 pips, 52.42. Profit is going to be 79.42. Okay, so what do I mean if you are brand new to this? Okay, what I mean is price right now is up here. If price does dodge down, what's going to happen with the sell stop is that as price comes down and triggers 79.62, your trade is going to activate, and we are going to take profit right here, 20 pips down, 20 points down. Okay. And then the next question I'm probably going to receive is, okay, Armando, but where do I set up my stop loss? I don't know your account size, and I don't know your trading plan, and I don't know your risk management. What I do know is we're going for 20 points, 20 pips, right? So if you want to go 20 points above to kind of do a one-on-one, if you want to leave it open, that's up to you. For me personally, honestly, now, 7 years later, I do not trade by putting a stop loss number in my account because I don't want them to see where my stop loss is at. I can manage my account because I don't over leverage. Actually, I under leverage in case the trade goes against me, but I know that I'm just happen to be wrong for that 15-minute moment or 30-minute moment. If I know where price is eventually going, I don't put a stop loss, okay? Especially when I'm under leveraging. But if you are looking for a stop loss in this type of scenario and you're going to be getting in here, then really your stop loss should be just above this high up here, right? Maybe this wick right in here. So again, I'm going to let you determine that. But again, this is a sell stop area just because price is here right now. Okay, just because price is here right now. Now, I'm going to give you that one here on this video. I'm going to be giving my members all the different areas down here to have sell stops and buy limits waiting. But I'm going to give you one more bonus one for this video as well, and that's going to be up here. When we do shoot up here, okay, I am going to say right in here, we are going to do a buy stop at 80.60 and then profit at 80.80. I'm giving you a free bonus one on this video. So buy stop at 80, because that'll mean that price will have broken this, and I'm going to be looking for this right here. Okay, I'm looking for this scenario that we came above and we took off to our next zone. I'm looking for this scenario once we get up here, but I'm looking for that scenario over here. So that's why I'm going to give you the exact same scenario. Buy stop 80.60. We're cashing out at 80.80, a cool 20 pips. So from here to here, 20 pips to the top side. So I've given you a buy stop and I've given you a sell stop on the way down that you can already pre-enter into your phone. And that way those trades can be activated. Now, my members, if you're watching this, don't worry. I'll be updating you on the lower and higher zones as we always do in our entries inside of our private channel as well. So I just wanted to give you some value for those of you that are watching this video. Okay, some trade opportunities that may not happen right away. It may take a little bit of time, right? We may see the sell first, and then we just kind of leave this up here open for when we come up here. Okay, because I think eventually before 2023 is over, we're going to see price break this 80-60 area back up to the top side. Okay, so this is kind of what we are looking at, when it comes to that price action that we're talking about. Now, what I'd like to do now to kind of begin to wrap up this video is I want to kind of show you the same 5-minute scenario, adding a little tweak to your video. I'm not to your video, I'm sorry, to your trading chart here. So I'm going to kind of go back here. And then what I want you to do is I want you to go ahead and go over to indicators. And I want you to type in BOL. Okay. And then I just want you to pick this one right here that says Bollinger Bands by itself. And I want you to click on it. Okay, then I want you to get out of it. And then we're going to open up the screen here, and we're going to see the Bollinger Band. We're going to open up the setting. And what I want you to do for the input, I want you to put 50. Okay, 50. Now, what that means is when we change that to 50 is that we are going to include a 50-day moving average in the middle of these Bollinger Bands. So you're going to go ahead and click that to 50. And if you want to change the style, you can. I'm going to go ahead and keep them that one orange. I do want to make this a little bit bigger here. So I'm going to make it thicker. Perfect. And then what I want to do is for the upper bands, I don't like blue. It meshes in. Let's make this yellow. Okay. Again, I want it thicker. Okay. And then for the lower bands, I also want to make it yellow and I want to make it thicker. Okay. And then I'm going to kind of close this right here. Okay, right in here. Okay, so that's going to give us some bands right in here. Now we go right in here, and we can kind of see that we have these bands. Now, what you want to think about is you want to think of, and I want to drop all the way down to the 5-minute chart. Okay, I want to drop to the 5-minute chart. And what I want you to think about is these act kind of as big rubber bands. Okay, the more they stretch, eventually it takes off a lot faster. Now, what I want to do is I want to go ahead and close this. Let me see if there's a way that I can. Perfect. I can just hide the joint. Perfect. Okay. So what I want you to look at that to see as we kind of move back is kind of what happens when price breaks the Bollinger Band. And again, I want you to pay attention. This is extra bonus stuff. I'm doing a longer type of training for this inside of our members area, but I want to give you value. If you say, hey, Armando, I can't afford $4.99 a month. Hey, that's cool, right? I'll give you a little bit of extra bonus on this video here that we'll be covering. So what I want you to do is take a look at here, right? Now we are on the 5-minute chart, okay? And when we see that price breaks above, let me grab a arrow. When we see that price breaks above, right? What we have to realize is, number one, is we are above this zone right in here, right? We kind of established a zone here. But again, if you're looking for some scalping opportunities, I want you to ask yourself this. Okay, we're on the 5-minute chart. We broke above. What you should be looking for next is saying, okay, let price come back down towards the 50-day moving average. And that's what we're going to take our entry, right? Because if we can establish that we are in an uptrend, right, as we are here, we should only be looking for buying opportunities, right? So price broke above. That's our first alert. Okay, we're above. Let price come back down to the 50. Now you can take an entry near the 50 with a very tight stop loss and be able to scalp some points. What happened here? Price broke above the top Bollinger Band. Okay, came back down to the orange line, which is the 50-day moving average, and then it came back up to the band, right? So you're grabbing 10, 15 points, 10, 15 points. You're going to have a 100-point day. We broke above. We came back down. We came back up. We came back down. We came back up. We broke above. We came back down. We went up and got some points, right? Now what happens is as we change direction and now we begin to see that price here, we begin to come down, we're looking for the opposite. Now price closes below the band. We're waiting for price to come up to the orange band for a sell. We take it back down. Price closes below the band, back up to the 50. We take it back down. Price closes below the band. We wait for the 50. And then here we have double confirmations. We have an area of resistance and we've got the 50-day moving average. We take it back down. Okay. Now in this one, look at this. I wanted to kind of key in here as we wrap up this video right here. Right here, we get all the way down. So we say, oh man, we're way below the band, right? That means we've kind of stretched out a rubber band a lot deeper, right? So just kind of think of when you have a rubber band, and I was looking for one, so I'm sorry, and we pull that rubber band back. If we just pull it back a little bit, whatever is in there is just going to move forward a little bit. But if we really pull that rubber band all the way back and we let go, kind of like a bow and arrow, it's going to go a lot further. Same thing here. That's the concept, right? The concept here is that because price shot down so far down and really pushed this band almost to become a straight line, look how it took off once it broke the band. Now we tell ourselves, okay, we came from a zone. Let me let it close above the band. We see it retest the zone and then boom, took all the way up. Okay, took all the way up. So just another way that you can add a simple Bollinger Band to your chart and look for another form of confirmation, another style of trading already built into what you're doing. But I know for me at the beginning, having Bollinger Bands were super, super important because it gave me an area to work with. Once the Bollinger Band broke, okay, then I knew that something was going to be coming where I could scalp all day. Okay, so that's just a little strategy that I learned, and I wanted to pass it over to you. Okay, I hope you got some value on this video. If you did, definitely consider smashing the like button for me. I'm actually going to swap out my banner down below. Hit that like button. I appreciate it. I hope you're getting value on these videos. Again, I usually would do a longer training / looking at crude oil for every Sunday. So don't forget to hit your notifications bell so you can be reminded to come back, especially every day of the week, I hope, but especially on Sunday when we do a longer form. I will always have a short tutorial and then obviously cover crude oil analysis. And if there's another type of analysis that you want me to do, maybe you trade natural gas, maybe you trade the NASDAQ or the US 30, I'm going to be adding those to our members. But if you want to see something done here in the public channel, definitely go down below to the comments and tell me what you would like to see, what chart you would like me to analyze. And I will do my best to either make it a YouTube short in a quick 1 minute or less analyzing, or a longer form video just like this. But again, crude oil is pretty much my big bread and butter, as they say. And I trade that, 80% of the time. And then I trade the indices the other 20% of the time as well. So again, thank you so much for watching. I hope you got some value, and I'll see you on the next video.